Welcome to the deep dive. Today we're tackling something pretty significant, that sharp climb in gold prices we've all been noticing.
That's right, and we're going to unpack it using insights from an analysis. It's called the Gold Rally, a global reassessment of trust and safety. Came out very recently, April 25th, 2025.
Yeah, and our mission really for you listening is to get under the hood here. Understand what's actually driving this gold rally and maybe what it's signaling about, the bigger financial picture.
Exactly. Cut through some of the noise and get to the core insights.
Okay, let's jump in then. Gold hitting these, well, unprecedented levels. The analysis argues this isn't just your standard market ebb and flow, right?
Not at all, no.
Yeah.
The central point they make is this isn't just about, say, typical supply and demand or investors feeling bullish. It's pointing to something much deeper. A real unease about the stability of the whole financial system.
Okay. So the analysis brings up this idea of gold as a barometer of trust. What does that actually mean in practice here?
Well, what's interesting, according to this analysis, is that gold prices surging don't always track with, like, good economic news, not like you'd expect other assets to.
Right.
Instead, the argument is that gold reacts more to signs of financial fragility, of instability. It's like a natural response when people perceive vulnerabilities in the system.
So it's almost counterintuitive. A gold spike isn't necessarily a thumbs up for the economy.
That's a really important point the analysis makes. This surge, they suggest, it actually reflects a kind of fundamental rethink about what the financial system is truly worth.
A rethink.
Yeah, it's prompting questions, like who is really in control? What's real value look like these days? And maybe crucially, who's looking for the exits, potentially?
Yeah, it does sound significant. Okay, let's drill down into the drivers then. The analysis talks about the US dollar being overstretched. Can you unpack that a bit?
Sure. So they reference a JP Morgan estimate suggesting the dollar's trading maybe 10–15% higher than its, let's say, fair value based on historical interest rate differences.
Could be 10 to 15%.
Yeah. And the analysis connects this to, well, things like ballooning government deficits, Fed actions, using tariffs as policy tools. It paints this picture of the dollar as, like they call it, an overstretched brand.
An overstretched brand.
Right.
Interesting phrasing. Meaning it's valued higher than its fundamentals might justify.
Basically, yes.
Yes.
That's the idea they're putting forward.
Got it. And central banks, we keep hearing they're buying up gold. How does that fit into this picture?
Ah, yeah, that's a big piece of the puzzle. The analysis really highlights that central banks worldwide are definitely watching all this uncertainty, and they are responding by adding more gold to their reserves.
Okay.
But what's sort of counterintuitive, perhaps, is real yields. The return you get after inflation. Usually higher real yields make gold, which doesn't pay interest, less attractive.
Right. You expect that.
But that hasn't dampened the demand here, actually. The analysis suggests gold's appeal is holding up, maybe even growing, despite potentially higher real yields, which itself is a sign of deeper worries.
So this rally isn't just like small investors getting nervous. There's something bigger, more institutional going on.
Precisely. The analysis really stresses that. It's not just retail investors jumping in. It's fueled by what they call institutional doubts, a growing, loss of faith in fiat currencies.
Loss of faith.
Yeah. And they talk about a silent movement of wealth into gold. That suggests it's a more systemic concern about the long-term health of our usual financial structures.
And it's not purely economic forces at play either, is it? The analysis also touches on leadership, political stability.
Absolutely critical point. They suggest that a lack of what they term credible leadership, facing these big economic challenges, combined with deep political division.
Polarization. Yeah.
Right, and maybe a feeling that the big issues aren't being effectively tackled. All of that erodes trust in the established systems. And that lack of trust, it just adds more fuel to the gold rally.
So it's a confidence thing too, not just balance sheets and interest rates.
Very much so. It's tied into that broader societal confidence or lack thereof.
Okay, so gold is climbing because of this whole mix of uncertainties. But gold is a safe haven. That's not exactly new, is it? It has a long history.
Oh, absolutely. And the analysis really leans into that. Gold's historical role as the, quote, asset of last resort in crises.
Right.
Its value tends to hold up across borders through different kinds of turmoil. This rally is just a very potent reminder of that long-standing function, a reliable store of value when other things seem shaky. It's like that old reliable anchor.
Okay, makes sense. Now, what about silver? I saw the analysis mentions it's kind of lagging behind gold right now. What's the thinking there?
Yeah, that's an interesting observation they make. Historically,
As a pattern?
There often is. A strong gold bull market is frequently confirmed later by silver prices catching up and mining stocks doing well too. The
Yeah.
fact that silver and maybe mining equities haven't surged quite as dramatically yet, well, it might suggest we're still in the earlier phases of this whole trend.
So silver could still have room to run if this continues.
Potentially, yes. Silver often has more industrial use too, so it can be a bit more tied to economic growth expectations. This rally seems more driven by uncertainty, which might explain why gold moved first and faster.
And within this uncertain environment, the analysis emphasizes physical gold. Why the distinction?
Good question. The tangibility is key. They position physical gold, actual bars or coins you can hold as a direct hedge. It's an asset that exists outside the traditional financial plumbing.
Right, not just a number on a screen.
Exactly. It offers a kind of protection against market swings or even systemic risks that maybe digital gold or ETFs don't quite capture for everyone in the same way. That sense of holding something real.
We talked about central banks buying, but the analysis uses some pretty strong wording, calling it an act of desertion. That sounds quite dramatic.
It does, doesn't it? The analysis puts forward this idea that central banks piling up gold isn't just, sensible diversification.
More than just spreading the risk.
The argument is it might be a strategic move to sort of opt out,
Mm-hmm.
partially at least, from the current system based on fiat currencies, to shield their reserves from potential chaos down the line.
Wow, opting out. But couldn't you also just see it as, well, prudent management in uncertain times, not necessarily abandoning fiat altogether?
Oh, absolutely. That's the more conventional interpretation and likely part of it. But the analysis is pushing us to consider, if there's a deeper motivation, a signal about their long-term confidence in the current setup.
And this potential shift, could it lead towards something like a new world order where gold backs trade more directly?
That's one of the more speculative long-term possibilities the analysis touches on. This idea that if trust in fiat keeps eroding, and maybe we see more what they call financial warfare,
Using currencies and sanctions as weapons.
things like that, yeah, then there might be a growing desire for a universally trusted asset like gold to play a bigger role again in underpinning international trade or even currencies, a return to something more tangible.
It feels like these big players, institutions, central banks are making moves, but the analysis notes retail investors might be slower on the uptake, often waiting for pullbacks.
Yeah, that's a common behavioral pattern, isn't it? People trying to time the market by the dip.
Sure.
But the core message here from the analysis seems to be that maybe preparation rather than timing is the key takeaway. The long-term implications of what's happening might be more important than catching the absolute bottom of a price swing.
So looking at the big picture, what's the ultimate message the analysis wants us to get from this gold rally?
I think it boils down to a pretty stark conclusion they offer. The old rules are gone and change is imminent. In their view, this gold rally isn't just noise, it's a major signal. A signal that the basic assumptions underpinning the financial system are being seriously questioned, and we should probably be ready for some kind of shift.
Okay, so let's try and wrap this up. This deep dive into the analysis, the gold rally, it suggests this surge we're seeing isn't just speculation. It's really pointing to a global rethink about trust and safety in the financial system.
Right. Driven by a whole cocktail of things, worries about the dollar's value, what central banks are doing, those institutional doubts we talked about, geopolitical tensions.
And that silent movement of wealth by central banks really hammers home that idea, doesn't it? This reassessment of trust in fiat currencies.
It definitely underscores it. And given that central banks are consistently accumulating gold and these uncertainties don't seem to be going away quickly, well, understanding what this rally implies becomes pretty crucial for you, the listener, trying to navigate what's next.
Absolutely. So maybe a final thought for you to chew on. Considering gold's deep history as that crisis asset and seeing central banks making these strategic moves now, what other really fundamental assumptions about how the global financial order works might be worth questioning right now?
That's a good question to leave things on.
Thanks for taking the deep dive with us today.